G'day traders, Marius Tomilek here. Today we're going to talk about mistakes and how they will be detrimental to your account. Mistakes will be detrimental to your account. Not can, not may, they will be detrimental. Now, they can turn a winning month into a losing month, a break-even month into a losing month. They will lose you pips. Mistakes lose you pips. If they don't lose you pips right now, they will in the future. And the best thing you can do for your trading is eliminate all mistakes. Because you have built a trading plan, I'm assuming. And if you haven't, you should. Which you've back tested, forward tested, tested the crap out of it. You've tested it so much that you know it off by heart. But when it comes to live market trading, when you have real money into the market, you start to question that plan, which is stupid because you've actually tested it yourself. You've done all the hard work and you still question it. Why do you question it? Because of recent pain. Now, this recent pain makes you question your trading plan, and you should always have 100% belief in your trading plan. And even if you have 100% belief in your trading plan, as I do, I still made some stupid mistakes. Because of fear, because of greed, because of all the things that I have put into the blog post. And if you haven't read the blog post yet, if you didn't come from the blog post, there's a link underneath this video. But what you really have to do is eliminate mistakes. Now, as you will see from now on, from here on, I will put up the charts and start talking about the mistakes and actually go into detail of why I made each mistake and how much it cost me and how much I should have made. So stick around.
Alright traders, here are the stats. Okay, so first of all, for the month of January, what actually happened? Well, first of all, I had 106 trades. 40 of them were wins, 48 were losses, 18 were break-even. That's a win percentage of somewhere around 37.74%, because the break-even I didn't count as anything. But if I would have counted the break-evens as wins as well, it would have been a 54% month. Now, you say, that's a good month. Well, yes and no, because of the mistakes I've made. That was a total of 8 trades. Now, those 8 trades would have been counted as wins instead of losses. So it would have been 48 wins, 40 losses, and 18 break even. Now, that would have been a grand total of 106. That would have been a 45% win ratio instead of a 37%. Or if I would have counted the break-evens as wins as well, it would have been a 62% month. Now, 62% is right on cue. That's about where I'm at with day trading. That's including break-evens as wins. But because of the mistakes I have made, I ended up with negative 298 pips. But I missed a total of 302 pips this month because of mistakes. Now, who knows what came over me? I had a talk to Akil. He said it was first month jitters. We just started the new year. I wanted to start it with a bang. Started with a bust. And it's a bust. It's not a bust because I lost pips. It's a bust because I made mistakes. Now, that is the important thing to get from here. You can have a down month, but if you have followed your trading plan and you have not made any mistakes, it is a good month because it's just part of the expectancy. The rules are the rules are the rules. Now, let's get into it. First week, I made only one mistake, first week of trading. Okay, second week of trading, this was the biggie. Now this one, I actually made 5 mistakes. the week after that, I realized I've made a lot of mistakes, and I started to get aimed at not making any more mistakes, because mistakes kill and they destroy the expectancy. And it's good that I've actually I have here errors made in this column. Now, it's the best thing you can do is note where you have made mistakes, the actual trade where you've made the mistake, and the month and the day of the week and all that. It's not very important. It's just important that you have actually made the mistake and you have written it down. Because if you write it down and you write down how much pips you've missed, plus or minus, and you tally them up at the end of the week, you will be really, really, really surprised. Because as you can see, in the second week of trading, I missed 190 pips. That's 190 pips from 5 trades. So instead of having a down week, I would have had an up week. Now, this week number 4 would have been a down week either way, even if I didn't make any mistakes. But it would have been 97 pips better. Let's say it like that. So instead of having a down month this month, instead of having a 6% drawdown, well, 6%, yeah, so a 6% drawdown this month, I would have been able to make a 0.2% up month, but it doesn't matter. It would have been a break-even month instead of a losing month. Now, let's get into the trade-by-trade basis. Alright, first trade was the Euro-Yen. Not this one. Where is that bugger? Euro-Yen, 13th, 12th, 13th. No, that's 31st. How did I get there? 7th, no, 9th, 10th, 13th. Alright, this one, for trend continuation, right? I saw the double top. Let's delete that box. So as you can see, comes up, I saw the double top, I was like, great trend continuation. It's been a big down move, as you can see. Great trade and continuation trade. I'll just sell it here. What I came to realize after, 25 minutes, the RSI was never overbought. So I had to close it out at market. Those are the rules. If the RSI is not overbought, not a trade for me. Now, it would have lost because the stop loss would have been quite close. Or actually, it would have won. But either way, it's 3 positions and 5 pips per position. That's a total of 15 pips that I missed, or that I should not have lost. Okay, next one, pound yen. Pound yen. This one, I got greedy. Now, why I got greedy, I don't know. Rules say it like this. It's a Gartley pattern. If my 127.2 extension goes past the 886 retracement, then I enter the pattern at the 886 retracement. My thought process back then was, alright, 127.2 extension is higher. Let's take the higher one because I've seen it go up there quite a few times. So let's just take the higher one, and then from that one we make, what was it? We make 4 more pips. For 4 more pips, because of that 4 more pips, I missed a total of 104 pips. Why? Because my rules would have gotten me into the trade at 171.46, right here, and it would have been a beautiful 2-target winner. Now, because of greed, instead of making 8 more pips, because of greed, instead of making 8 more pips, I lost 104. Target 1 would have been 42 pips, target 2, 62 pips. 104 pips just on one pattern. That would have been a great win. Now, on the same day, New Zealand dollar, 15 minutes before the pound yen. Well, where's the New Zealand dollar? There it is. Same thing. Mistake. This one was a bat pattern. Now, my rules are, if price action comes within 1 pip of entry, and this is where my entry was at, 83.68, if price action comes within 1 pip of entry and then retraces back to the 38.2% retracement, then the pattern is invalid. Now, funny thing is, it didn't actually get to 1 pip. It got to 83.66.2. And my entry was at 83.68. Now that's 1.8 pips. So that's not 1 pip. That's nearly 2. But I took the entry off anyway, because I was scared. Because I've seen, again, same thing. Oh, I've seen this happen a lot. And it comes to within 2 pips of entry, and then it retraces to the 38.2, and it comes back up and gets me stops out. Yes, but I didn't remember all the times that it didn't. It got me entered and it took targets. Well, this one was another reminder. Because I missed 18 pips on target 1 and 28 pips on target 2. That's another 46 pips. So that day I missed 150 pips from 2 trades. That would have been a good winning day. But instead it turned out to be a bad day because of mistakes. Now, next one is the Aussie dollar. Aussie dollar. Now, my rules say, if my stop loss, first of all, let's forget about that. There were 2 patterns. There was a big bat and a small Gartley. My rules say I can take both. If I get stopped out of the Gartley, then I can enter the bat as soon as I get stopped out. Those are my rules. Now, what my rules also say is that if my stop loss gets to an end in a 4 or a 9, I have to have my stop loss instead of a 4. Instead of 88.14, I have to have it at 88.16. Now, that would have put a cramp in my make it thicker so you can see. This would have been the stop. That would have put a cramp in my risk-reward ratio. I would have been 1 pip over the risk-reward. So I would have risked, let's say, 11 pips, and I would have made 10 pips. It was ridiculous, really. So I left it at 88.14. Now, as you can see, price action came up, hit my stop loss, just nipped it, and then bam, it retraced back down. Now, I was lucky because there were 2 patterns this time. So I could re-enter the market straight away and not lose that many pips. I only missed 13 pips total because of the stop out. Now, my stupid decision of not having the stop loss up here would have made me 13 pips more because the rules say so. But what if there was not another pattern here? What if the bat wasn't there? I would have been stopped out, and then the market would have rolled on without me, and I would have lost the whole potential profit and all of the stop loss as well. So that would have been a big loss. I was lucky this time, but you never know what will happen next time. Alright, next one is Aussie dollar as well. Aussie dollar on the 17th, and here we go. Now, Aussie dollar on the 17th. We have a beautiful double bottom here, triple bottom here. As you can see, RSI is oversold, hits a triple bottom, comes up, retraces, and then comes back here. Now, I'm thinking, maybe we'll get a double bottom. RSI is oversold, got a double bottom. But what I didn't pay attention to, where's the structure level? You cannot call this a significant structure level. This is just there. It's just in the middle, well, not really in the middle of nowhere, but it's not a significant structure level, which is what my rules say it should be. So after how long did it take for me to realize this? It took an hour and 45 minutes for me to realize that there was no significant structure level there, which I should have checked, which should have been the first thing I should have checked. But stupid me. Mistakes suck. So I missed a total of 3 pips per position. And with 3 positions, that's a total of 12 pips lost. Now, next trade is the Euro Yen. Euro Yen. There we go. The Euro Yen. And 21st. Bear with me for a second till I find it. There we go. Big bat pattern. Now, I did not see this bat pattern. Why did I not see this bat pattern? Because I made the mistake of not paying attention. It was 5 o'clock in the afternoon, and I was getting restless and I was getting bored and I had a lot of stuff to do around the house, so I just started, you know what, the market's not going to do anything, and I get out of the market at 6 p.m. So I would have gotten out of the market here. And the market's just not going to do anything for another hour, and I'm just going to sit here and get bored and miss out and not get to do all the housework I have to do and all that. So I started doing the housework, and I missed this pattern altogether. And as you could see, it's a beautiful pattern. It came in, stopped right at the level. It even put in a triple bottom. If I would have been paying attention, I would have seen the triple bottom. And another double bottom here. And then bam, it just went off towards the races. So this was a 1 target winner. It would have only taken target 1 before coming back down to stop us out for break even. But still, that 1 target winner would have banked 34 pips just off that 1 target. Now, last but not least, the pound yen trade. Now, if you've been in the markets lately, you can remember the big fall on the 24th. Let me find it, bear with me for another second. 22nd, 23rd, and come on. There we go. We can all remember this big fall. It was something ridiculous, like 300 and something pips. I saw this. I saw the market fall. And I saw it fall since 9 o'clock in the morning till 1 o'clock in the afternoon. Now, you can think it's a big fall. And I looked at the structure level. I liked the structure level. It was a good structure level. It had a lot of points of touching and everything. Double bottom met all my rules. So what did I do? Naturally, you enter the double bottom, right? Well, I entered the double bottom, and then I came to the realization that my stop loss would have been 40 something pips away. And here the fear started to come in. The stop loss should have been somewhere around here. The stop loss should have been here. That would have been 66 pips away. 65 pips away from the entry. Now, this is when the fear kicked in. I trade for every double top and double bottom, I trade 3 positions. So that would have been a big loss to my account. Well, not really to the account, but to the pips. It would have been quite a lot of pips lost, considering how much is made on a daily basis. Just from one trade. That was the big trade that just blew my mind. Now, the problem with this was, I thought, if I shorten my stops, and my rules again say, I should be underneath a psychological number, which 169 is quite a big psychological number. But I said, what if I shorten my stops to, let's say, 48 pips? I would be able to get away with, even if I get stopped out, because I would be wrong. I'd be wrong. I would know I would be wrong, even if it broke this. But what happens? The market came down, just nipped my stop loss, just nipped it, didn't do anything more, came back up, and the double bottom was still valid. Now, instead of doing all this, I should have either left my stops where they should have been, over here, underneath the 169, 169.95, 168.96, instead of moving them up to 169.12. I should have either left my stops here or closed the trade out right when I entered. Because if the stop was too big for me, I should not have been in the trade. That would have been logical. But let's say, look, account can handle it. These are the rules. I have to take the double bottom. Okay. But I should not have, I should have had my stops down here. Now what happened? Market came down, nipped my stop loss. The double bottom is still valid. Now my rules say, if the double bottom is, if you get stopped out and the double bottom is still valid, or double top for that matter, you have to re-enter the trade. So what did I do once this candle closed? I re-entered the trade and then put my stop loss where it should have been originally. And then bang, I got stopped out again. So instead of being stopped out once, I was stopped out twice on the same double bottom because of mistakes, because I didn't follow my rules from the beginning. And I lost, instead of losing X amount of pips, which I would have lost normally if I entered here and got stopped out here, I lost 21 pips more per position. That is 63 pips total lost total lost on just this trade, because I got stopped out here and I could only re-enter here. So this distance from here to here in pips, I missed. I lost when I shouldn't have. So I hope this video has opened your eyes how mistakes can be very detrimental to account size. Well, not really to account size, but let's put it this way. Let's have a look at the stats again. If I didn't make any mistakes, this would have been a break-even month. Now, the expectancy is that you have 60% or between 60 and 65% winning ratio, right? Monthly. So I would have hit my 60 to 65% this month, and it would have been a break-even month. Now, I didn't hit my winning ratio, but I should have. So this doesn't mean that winners will be coming. No, this means that instead of having hit my winning ratio and didn't, I have turned a break-even month into a losing month, into a big losing month. So when a drawdown, this was a drawdown that wasn't supposed to happen. This was a drawdown induced by mistakes. if you get my drift. Because making mistakes is not good. They can induce drawdowns. What if next month is actually the month with the drawdown? The month that gives you the 50% winning month. And you don't make any mistakes. Well, you've just made your drawdown 300 pips more than it should have been. So, take it away from me. Do not make the same mistakes I did, and don't make mistakes. Period. The trading plan is the trading plan. The rules are the rules. You have back tested them. You have forward tested them. You have an expectancy. The expectancy will not come if you make mistakes. The expectancy this month should have been a break-even month. Well, instead of that, because of my rule breaking, I lost pips this month. I made it a drawdown month. Now, I'm trying to hammer this home as much as possible. Mistakes will kill you. And for the moment, you can justify any trade. If you give me any chart, any time frame, I can justify why I can go long and why I can go short from that moment on. But the rules, because of this, I have written rules, and I have written strict rules, because I can justify anything in my mind. That's what humans are programmed to do. They can justify anything. And we can justify any mistake that we make for the moment. But that is why at the end of every day, you should go back through your trades, or at the end of every week, go back through your trades and analyze them. And see if, with a clear mind, when you don't have real money put into the market, if you would have done exactly the same thing. If the answer is yes, then you're on the right track. If the answer is no, then you need to revise and classify that as a mistake. Thanks for listening to me. I did go on a bit long, and I'm sorry for that. But I'm still trying to hammer this home. Don't make mistakes. Mistakes are bad, because a bad month is qualified by the number of mistakes you make. If you have minus 1,000 pips this month and you have made no mistakes, then it is a great month. If you have 1,000 plus pips this month and you've made 20 mistakes, know that it is a bad month. Because mistakes in the long run will lose you money. If you win once, twice, 3 times, 10 times in a row with making mistakes, you have made it a habit to break your rules. And the rules are there because that's what you tested. If you break your rules, then you're going into untested territory, and over the long run, you will lose money and pips and everything. And you might even blow an account. So take it from me, try not to make any mistakes. And if you do find yourself making mistakes, try to write them down and see how much you have lost because of mistakes. Thank you very much, guys, for listening to me again, and I will stop it right there. Have a great February and make lots of pips and no mistakes. Bye.